Welcome back to the channel, everyone. I'm Doug, the retirement guy. We have a new update to the Rex Shares weekly income stream. We're going to review all four of their funds. We're going to give you the ups, the downs, the good, the bad, the ugly. We're going to give you the buy, the sell, the hold. We'll give you all the information you need to do about Rex Shares. But before we get into that, we got to do a shout out to all of our subscribers. And if you're not part of the family, if you're not part of the community, don't be afraid. Hit that subscribe button, hit that bell notification. You don't want to miss any of the videos that we crank out to give you information that will help grow your portfolio. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This video is primarily for entertainment purposes and educational information only. If you are looking for financial advice, always contact a financial advisor. So I always do an update to give you guys the idea what is Rex Shares, because not a lot of people know about Rex Shares. This is about the only fund out there that does something so totally unique that we want to make sure we're always covering this. And that is half of the portfolio seeks to generate that weekly income via covered call strategy. The other half of the portfolio remains uncovered, allowing for upcap upside potential. So why do they do this? Well, they're trying to get, I'll call it the cake and eat it too. They're trying to get you that weekly income stream rolling in, and then they're also trying to grow your funds to give you both sides of it. That's why it's a balanced growth and income portfolio. The enhanced exposure, they try to get 1.25 leverage of the select stock that they have. And with this program, you're going to see some increases in growth, and you'll see some increases in the weekly income. But you won't see unbelievable numbers coming out of this because of the policy that they use. So I always put this as a safer bet for the conservative person who thinks that this is, they don't want to gamble on the weeklies like you see with a lot of NAV erosion, a lot of ups and downs and volatility. This is more of a steady fund. So let's take a look at how well they've done with the growth side of it. So when we take a look at the growth side of this right now, you will see in 1 week, coin is up 12.20%. It's our biggest grower for the week. Okay, our next one is going to be MSI, the MSTR at 9.14. Tesla comes in at 3.46, and then Nvidia ends up at 0.95%. So all of them are up this week. They've all had a very, very strong week in the value side of it, the growth of the value of the fund. So this is a good, strong, positive right off the gate. We take a look at the 30-day and the year-to-date categories, and there's only one really, I'll say a negative to it, is going to be MSII. They're down 16.69% year-to-date. But everyone else is, you take Tesla and Nvidia, both of them are 20+%, and coins coming back in at 9.48. And you're going to expect that to see some growth, especially when you're looking at the 30-day and the 1 week, how they've had huge growth over that period of time. We give you the average across the board. You can take a look. Coin is well above its average, rolling average price. Nvidia is actually down. So it could be a possibility. What that tells us is that's a possibility that you could actually be in a buying situation. And then again, everyone is up and over their weekly average. Now let's take a look at the fund's distributions. So when we take a look at this, the very first one in green is going to be the Tesla. And they're actually the highest paying dividend this week out of the Rex Shares package, paying 40 cents. It's up about a penny from last week. We go down the list. Pretty much coin had a phenomenal week with 34 cents. That's up 24 cents over last week. Now, are we expecting to get 34 cents on a regular basis? This is why we throw an average dividend out there. And you can see their average right now is about 28 cents. So they have been struggling, and this week they're pretty much just getting a little bit of recovery and a little bit back to normal. So so it's expected, and we expect to see that. Nvidia is down 22 cents, and it's right back to its average number. So last week was just a huge little kick in the pants, but we're back to normal with NVIDIA. This is why you look at these things. You look at the comparisons on a regular basis. That is it doing what it's supposed to be doing? Is it something unique? What can we count on? Take a look at MSII. They were really doing bad. They were paying 8 cents a week, and now they're back up to 17 cents, which is what their average currently is. Now, the Tesla is a totally different game, but I see Tesla as being, it's making up from lost time. 39 cents last week, 40 cents this week. Average is 21 cents. So I just think the Tesla is still going to continue to produce some big dividends because they're on that recovery path. You look at the yields pretty holding well. 69% for Tesla, 64% for Coin, 38% for NVIDIA, and MSII is still at 22.03%. So as we said, these are great funds. You saw that they have good growth, and we turn around and they have decent income. So I would put this as Rex's program is actually working very, very well. Now the question though is, do we really want to invest in these programs? Do we want to be a part of this? Well, let's take a little deeper diver look into it. And what we're going to look at here is the return per week. So what we use this for is what percentage of your share price is coming to you in dividends. And we use benchmarks on a normal weekly fund. Something that we would say is a high income is something that's going to have a percentage of about 1.6%. Okay, just to throw it out there, and I'm not trying to promote them in any way, but it's going to be ULTY is about 1.63 to 1.65 on a usual basis. So that's a benchmark. That's been known as the #1 income generator across the board. So when we take a look at these are all well below that. The best one you got is Tesla at 1.34, and then the coin side of it is 1.25. Now what this does not calculate in is the growth that you had of the natural fund. This is just purely someone on an income basis. So if you're looking for just pure income, this is probably not the best choices and best places to where you want to put your money. But again, for that conservative one that we got to look to as well, we're not all just looking for big income. We're looking to be conservative. We're looking to be safe. We're looking to set, forget, especially in the retirement side of it. These are some decent numbers of giving anything over 1% is very, very strong. So they do a good job across the board. How about return on investment? Now, if you're not familiar with what return on investment is, I'll real quickly explain it to you because this is how I buy it, and I'm very, very comfortable with this. What I will look at if I'm going to take and invest into a fund, and we're just going to pick one, we'll pick the Tesla since it's in green. If I'm going to invest $29.90 into a fund, I want to know how fast am I going to get my money back out of it. Okay, and that's what turns it into a cash cow, that I have no money invested into it and I just continually collect dividends. Now, when I'm investing like that, normally with the weeklies, I'm looking for something that's going to pay me back in 1 year or less. Anything over that, it's a long term. I got to put a lot of study into it, make sure that the fund's going to continue to pay. The other thing that you have to do is you have to take a look at the dividend. What has been the average dividend? What's it coming out with? I don't want to see today I get $1 and next month I get 10 cents. I want to see a true hardcore average of what it works into. So with the Rex Shares program, now this is just, again, working off of dividends. This is, remember what the goal is, to get our money back. And because if we have growth in the fund, which is we all want, you got to sell the shares to get the money back. So this is why this program is all about what the dividends will do. So when we take a look at this one right here, everything is well over the 1 year mark. The best one you got out there is Coin at 1.8 years. So basically I'm going to put everything as about 2 to 2.5 years to get your money back. So as a return investor, these are not exciting to me. These are not pieces of the puzzle. These are things that I want to call and say they are set and forget funds. You want the growth. You want the income. So it's the opposite of the way I buy. It's the opposite of a lot of people buy. But there's a big group out there that want to put things into their retirement accounts that they don't want to worry about the NAV erosion. They don't want to worry about anything. They just want to collect less income, but also security and safety of growing their fund. If you're new into preparing for retirement, or you're 40 years old and you're starting to build a portfolio, these are great ones to put in there because you're going to get the growth and you're going to get income. So let's take a look at the total returns, and this is the one where I come back and say this is again, the conservative person. What's going on? The person I just talked about, the 40-year-old that's just starting to put money away for retirement. Look at the yield. This is your dividend yields that they give you. 64, Tesla 69, 38, 22. Plus you add in the growth of the fund that it's had over the past basically 4 months. So it generates right now a total return of Tesla, 93%. Okay? So you're getting both sides of the fence. You're getting the cake and the icing, and now you're going to be able to eat it too, which is a 93% return. 74% from coin, 65% for Nvidia. And now look what happens here. The MSI II program, the MSTR Growth and Income Fund, it has a dividend of 22.03% yield, but it's lost 16.69% year to date of its growth. So it hasn't done what they've really expected that they've done with other shares, but you're still up 5.34%. Where this program would be phenomenal if you are just starting off, if you are brand new into investing and you're slowly building your portfolio, these are great funds to be a part of because, look, you haven't lost a dime across the board. And what I would tell you to do is what we call DRIP. Reinvest your dividends. Keep working your job. Collect the dividends. Let the dividends buy more shares, and you snowball this thing into a bigger and bigger portfolio. Look at the numbers we'll give you. You could almost take your Tesla and have almost double your value in 1 year. Same thing in coin. You could be 3/4 of it growth, but there's no losses across the board. Let me take a look at what the fund that we have. We invested into these funds when they first came out because we wanted to test it. We loved the idea of having a 50-50 based program. We put $1,000 into each and every one of the funds. We did not specifically buy at a certain price point. We didn't buy at a certain time frame. We didn't try to buy a deal. We just jumped in, both feet got them wet. We jumped in, put the $1,000 per share into it, bought as many shares as we could for $1,000, and here we go. So when we take a look at right now, the fund value, we have gained in only 4 months, we've gained $522.37, or 13.05% over 4 months. That's some solid growth, guys. Very, very interesting on that side. The dividend value is up to $650. Look at those two numbers. They are almost 50-50 program. So I got to give my hat off to Rex that they do exactly what they say they do. They're giving you both sides, the 50% in the income, 50% in the growth of the fund. So at $650, that's a 16% growth so far. So for a total value in 4 months, we have added $1,172 or 29.32% from our portfolio. These are some serious, solid numbers. If you were to put a little bit more money into it, the numbers would definitely get bigger. But this is something you can set, forget, let it go for long term. So my $4,000 is now worth $5,172. And we have $650 of that is sitting on the sidelines. And this is probably where we should show you where we take that $650 and reinvest it and start showing you how the drip works. So I got $650 on the sideline. Let's put it into money. Let's make it work.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.